Hello, how's it going, everyone? Zachary Jensen here from TaxWise Financial Services, where we're empowering small business owners to maximize tax savings and grow with confidence. Today, we're going to be going over the tax updates for 2025, what you need to know, and how it affects you. So, we'll go over that in this video today. Here at TaxWise, we're dedicated to simplifying how the 2025 tax updates impact your bottom line. So now let's jump into the first item I want to cover, which is the new individual tax brackets for 2025. The 2025 tax brackets reflect inflation adjustments, allowing more of your income to be taxed at lower rates. For instance, the 10% bracket for single filers now applies to income up to $11,925, which is up from $11,600 in 2024, which allows for more income to be taxed at the lower rate. Similarly, the 12% bracket for single filers extends to that $48,475 mark in 2025, up from $47,300 from 2024, offering additional room before transitioning to that higher 22% bracket. These adjustments result in modest tax savings for most taxpayers by shifting more income into lower tax brackets, effectively reducing the overall tax burden. I'll throw up on the screen now all the tax bracket information so you can see where you fall. Now, as a reminder, we are in a marginal tax system, so your income is taxed in proportions across different brackets, with each portion taxed at progressively higher rates as income increases. For example, a single taxpayer earning $100,000 would be taxed at 10% for the first $11,925, 12% for the next $36,549, and 22% for the remaining income. Understanding these brackets help you strategically time income and deductions to minimize your tax liability. Now let's go over the standard deduction increases. The standard deduction has increased, allowing more income to be shielded from taxes. For single filers, it's up to $15,000, up from $14,600 in 2024. For folks that are married filing jointly, it's $30,000, up from $29,200 in 2024. And for head of household, it's $22,500, up from $22,000 in 2024. This adjustment simplifies tax filing for most taxpayers, as approximately 90% of folks take the standard deduction instead of itemizing. If your deductible expenses like mortgage interest or charitable contributions don't exceed the standard deduction, you'll benefit from this automatic reduction in taxable income. Failing to consider this increase may lead you to overestimating your tax liability. For itemizers, you need to ensure that your deductions exceed the standard deduction to justify itemizing. Now let's go over the capital gains updates. The IRS adjusted income thresholds for long-term capital gains taxes. For folks that have incomes up to $48,475 and $96,950 if you're married filing jointly, you can enjoy a 0% capital gains tax rate. Similarly, for folks with incomes between about $48,000 and $533,000, or if they're married between about $96,000 and $600,000 of income, you are only going to pay 15% on capital gains tax. And if you are above these thresholds, you're going to have to pay the full 20%. For example, a married filer with $95,000 in taxable income who sells an asset for a $3,000 gain owes no tax on that gain in 2025. Neglecting to consider these thresholds could lead to unnecessary tax bills, especially if you sell assets during high income years, which we want to avoid. Now let's move on to the HSA contribution limits. The HSA now allows for higher contributions. For self-only coverage, you can now write off and contribute up to $4,300, up from $4,150. And for family coverage, you get $8,550, up from that $8,300 number in 2024. There's also a catch-up contribution if you're older than 55 of an additional $1,000. Keep in mind, HSAs provide triple tax benefits. Contributions are tax deductible, they grow tax-free, and withdrawals for qualified medical expenses are also tax-free. Maximize your contributions to reduce your current tax liability and prepare for future healthcare costs. Skipping HSA contributions forfeit immediate tax savings and long-term growth opportunities, so make the most of these increased limits and contribute as much as you can. Now let's move on to the retirement contribution updates. For 2025, contributing limits for retirement accounts are: for the 401k and 403b, $23,500, up from $23,000. The catch-up contribution is an additional $7,500. The IRAs remain unchanged at $7,000 with a $1,000 catch-up. Maximizing contributions reduce taxable income and growth in retirement savings. Don't miss out on employee matches as well, which are effectively free money. Failing to increase retirement savings not only costs you your tax benefits, but you also risk financial security in the future, so contribute as much as you can. Now let's move on to timing income and deductions. As we just discussed, the updated brackets and deductions create opportunities to lower your tax burden by timing income and deductions. For example, deferring income to 2026 or accelerating deductions into 2025 can reduce your overall tax liability. Ignoring these strategies can lead to higher taxes. Failing to plan or comply with IRS rules can lead to missed saving opportunities, overpayment of taxes, and potential audits. So work with your tax professional to make sure all of these things are above board. If you have any questions about any sort of tax planning or tax strategies at TaxWise Corp, this is all we do all day. So feel free to reach out to us in the description below. Thank you so much for watching. Have a great day.